Hi there and welcome back to the channel. In this video we're going to be discussing the latest earnings report of Meta. They reported a couple of days ago the Q3 of 2023. Now I am a shareholder in Meta, so I'm probably a little bit biased. The company is in fact the largest holding in my personal portfolio. I was able to take advantage of Mr. Market last September and pick up shares at below 90, which was a bargain in my opinion. But I'll try my best to keep this analysis as neutral as possible. So let's get into it. The first thing that I highlighted from the Meta press release was the revenue, which was pretty impressive for the quarter. But they saw a 23% change year over year compared to the Q3 quarter in 2022. And they were also able to reduce costs by 7%. And Mark Zuckerberg's year of efficiency seems to be paying off. Now, the company did buy back shares of about $3.7 billion, and they still have $37 billion available for repurchases. They have plenty of cash on hand of about $61 billion, and they are returning to their ways of being a free cash flow generating machine, where they generated about $13.6 billion in the third quarter of 2023. The company has some long-term debt of about 18 billion or so, which is not that much if you consider the fact that they generate 13 billion in just one quarter. Then owing 18 billion is not that bad. Now, if we look at the investor presentation and the segment result, we can see, like I mentioned, that revenue was 34 billion for the quarter and hasn't been even close to those numbers since Q4 of 2021 when the company did about $33 billion in revenue. It's also good to see that advertising is generating 33.6 billion for the quarter, which hasn't been that high for at least the last 2 years. Now, the operating income for the core business, which is the family of apps, which is Facebook, Instagram, WhatsApp, and Messenger, is generating 17.4 billion, which is a huge number for one quarter. And the only number close to that was in Q4 of 2021, 15.8 billion. Now, the total income from operations was 13.7 billion, which is another high after taking into account the loss from Reality Labs of 3.7 billion. The closest quarter was again in Q4 of 2021, with the total income from operations being 12.5. Now, the company seems to be controlling the spending on Reality Labs a little bit better, since, as we can see here, they were spending over $4 billion in Q4 of 2022. Now, the operating margin is also the highest it has been for a very long time at 40%, which is really positive to see. And we can see the theme of more controlled spending throughout the company, where R&D or research and development is now at 27, having been the highest at 30% in Q4 of 2022, and cost of revenue going from 26 down to 18%. And that's all positive news for shareholders. Net income is also really high at 11.5 billion compared to Q3 of 2022, where it was 4.3 billion. Capital expenditures are also going down from 22.8 down to 20 billion. Now, this is one of the key metrics for the business, which is family daily active people, DAP, which, as you can see here, the company defines a daily active person as a registered and logged in user of Facebook, Instagram, Messenger, and or WhatsApp. So these numbers are still going up, which is pretty amazing to think about, where you have only 2 years ago 2.8 billion users going up to 3.14 billion. Now, that's roughly 330 million daily users added in only 2 years. And to put that in perspective, I think Snapchat has about 400 million daily active users. So these numbers are pretty good. And it's the same pattern with the monthly active people going from 3.5 billion to 3.96. And Zuckerberg will soon be running out of people in the world to add to his platforms. Now, the family average revenue per person is decreasing a little bit since the highs of Q4 2021, going from $9 down to $8. And it is also impressive to see that Facebook is still growing In 2 years, they've gone from 1.9 billion to over 2 billion. Now, moving on to my favorite part of the investor presentation, which is the part that I always look at first, and that is the free cash flow that the company generates, which, in my opinion, is the most important metric to track. Now, Meta has never generated as much free cash flow of 13.6, and I remember Q3 of 2022 when their free cash flow dried up and people thought the company had no future. And Jim Cramer went on CNBC and cried. Now we can see that the trailing 12-month free cash flow for Meta is just under $37 billion. And the company has a market cap of around 730 billion, I believe, and an enterprise value of 700 billion, which means that the company is trading at only 20 times enterprise value to free cash, which in my opinion is relatively cheap. Now, I personally won't be buying more shares of Meta since they are already a huge part of my portfolio, but seeing how much free cash flow they are generating makes me happy to be a shareholder. Now, to put these numbers in perspective, if you look at a company like Tesla, which has a market cap of around 650 billion or so. They are generating less than 4 billion in free cash for the last 12 months. And as we can see, Meta is generating over 3 times more than that in just one quarter. So you can see the difference there in valuations between the two companies. Now, to wrap up this video, we're going to be going over a couple of the highlights from their earnings report. And the first highlight that I have is the investment priorities for Meta, which is no surprise that AI will be the biggest investment area for the company in 2024. Now, this was pretty interesting to read as well regarding Reels, which has now driven more than 40% increase in time spent on Instagram since launch. They also reached a monetization milestone much earlier than expected. And they estimate that Reels is now net neutral to overall company ad revenue, which I think that most people that follow the company closely were not expecting to see so soon. The company has seen a 7% increase in time spent on Facebook and a 6% increase on Instagram. And that is a result of recommendation improvements using AI. And this was interesting as well that business messaging also continues to grow across their services, and they believe that will be the next major pillar of the business. And this is something that I've mentioned in my earlier videos about the pricing power of Meta. I do think the company has a lot of pricing power when it comes to both Messenger and WhatsApp, since there is a lot of user engagement there, but not a lot of monetization yet. And an interesting point as well regarding Threads, it has only been running for 3 months, and they're just under 100 million monthly actives at this point. And Mark takes a shot at Elon Musk where he says that I've thought for a long time that there should be a billion-person public conversation app that is a bit more positive. And Mark also mentions here that the click to WhatsApp ad revenue continues to grow very quickly in particular and is already at a multi-billion-dollar annual run rate. So to summarize, I was pretty happy with the earnings report from Meta. I think this is probably one of the best quarters that I've seen with the company since I became a shareholder. But that's it for the video today. Remember to like and subscribe to the channel if you haven't already. Thanks for watching, and I will catch you on the next one.